All right, all right, all right.
Here comes the money.
Here we go. Money talk.
Here comes the money. Money, 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 money.
Dollar, dollar. Dollar.
All right, all right, all right. Here we are. It's Sunday night, 6:30. We're a half hour into the futures, and NQ is currently up 150 roughly. And let's get started with NQ. Now, I was thinking after the last weekend when I did the historical charts, I did it with yearly bars, candles, whatever. And I'm thinking, why don't I do the historical thing again, except this time I'm going to go with quarters. So instead of years, we'll go with quarters, and we'll see how we work out. So we have NQ to start, and here is NQ, and it's just a regular view of NQ. And as you can see, going back history-wise, here we had the bear market of 2000, the dot-com, dot-bomb bear market. Really doesn't look like much in terms of the overall chart. I mean, things have just been so explosive since then. And here's the financial crisis of 2008. Once again, it doesn't look like anything. And I think that's the way that the normal charts lay out, that it kind of does that to justify the explosion. I mean, it's just incredible what the market's done since then. But I'm thinking, I went with a log chart last weekend, and I'm thinking I'm going to go with a log chart again, and we'll see how we work out. So let's just put the log chart in. And it changes things quite a bit. First of all, the 2000 bear market looks like a bear market. That's pretty serious in terms of the drop that it took. And the financial crisis looks more like a financial crisis in context with the overall price movement. And then you have the takeoff after that, and it never looked back. We had the correction, 2022 correction, which is pretty decent in and of itself. But overall, the movement to the upside has just been gigantic. So what do we want to do? We want to take a look-see at maybe some fibs, maybe some trend lines, maybe some price levels, and get a sense of the overall here and what it represents. So let me go down and put in, did a little work beforehand and annotated the charts, and basically I'm looking at pretty wild indeed. I mean, we go up to 1,100% in terms of gain to the upside, Fibonacci-wise. So it's just incredible, the run that it's taken. And I'm just wondering, from a grand scale of things, is it too much too soon? Does it have enough structure? Did it run to the upside and now it has to backfill? I mean, the bear market of 2000 was after the go-go 80s and 90s, where the market just cranked to the upside big time, and it came back significantly. Are we at that junction now? It doesn't look like it when we look at the way things have gone. I drew this trend line, and it's a pretty decent trend line. Usually want to have like 3 touches, to have any kind of decent gauge of whether it's a valid trend line or not. This has 1, 2, 3, 4, 5. And the latest is the move to the downside with all that's going on now. It's come down to almost touch the trend line now, and it bounced. So it's come back up. In terms of the price levels, I really want to draw not necessarily lines, even with the Fibonacci. I don't necessarily want lines. I want like bands or, just fat lines. that can account for, different things going on, like price hitting this area with the Fibonacci and the price levels and just kind of consolidating and chugging through here, not just cranking to the upside like it did here. Kind of slowed it down a little bit, had to digest a little bit, and then move higher. So there's that. What else? Well, I could always throw in my good old faithful indicator, the anchor momentum. Let's see. There we go. Let's just make sure that it's okay. So what is the anchor momentum showing us? Well, if you're stopping back, if this is the first time, I'll do my best to just give you a good overview so you understand where I'm getting at. If you're stopping back, then you probably heard me any number of times reference the red line is the fast line, the green line is the slow line, the cyan line down here is the zero line, and it's the relationship of the three that determines what we're looking at in terms of price. So when the red line is over the green line, price moves up. When it's over the zero line, when the red line and the green line are both over the zero line, it moves up. When the red line crosses to the downside of the green line, price comes down. When the red line breaks the zero line, it moves that much more to the downside. It accelerates. And when the green line breaks the zero line, it slows down any kind of movement to the upside that the red line may be presenting, which is what happened here. But it was a shallow cross to the downside, so it did have a dramatic effect, and price continued higher as the red line and the green line chugged to the upside, and did so quite a bit before the red line crossed back underneath the green line, and there was consolidation. Didn't necessarily retrace that much, but it's right in that area of the price levels and the 261.8 fib. So different levels I drew the fib at mostly had to do with areas where there's consolidation, or it's just prices kind of chugging sideways. It's not necessarily continuing higher. So it's a little bit of a pause. And you can see at each level, there's that kind of stuff going on. Now the 685.4 price broke through and didn't touch back, did it? No, it did touch back, forget that. But it did present support. After being resistance that it broke through, it basically represents support, and solid support at that, and then it moved higher. So that's pretty much the interactions that are going on. And we could look for what? Well, what I'm looking at, what this anchor momentum is showing is considerable, I believe, considerable divergence. And it's negative bearish divergence, as opposed to positive bullish divergence that we've touched on before. Why is that? Well, you've got this high point here that ties into the high here, which is fine. But subsequently, you've got a lower high here that ties into a higher high here. So you're going from high, higher, you're going from high, lower. And that's your bearish divergence. And as a result, it's coming down. Not dramatically, but you know what? It's early in the move. It's not to say, we're looking at quarters also. So you're looking at long periods of time. And I just want to stress quarters because we're not looking at like minute charts or day charts or something where you could see something happen dramatically. We're looking at quarters where you're encapsulating a whole 3 months into one bar or candle. So that's NQ, that's the NASDAQ 100, and that's looking at a quarter. Now we could burrow down into NQ and take a look, see at what's going on under the hood, so to speak. Or we could do what I was thinking. I've actually selected 10 other tickers to take a look at. And that means that this video is probably going to go longer than what I prefer, in terms of I was trying to aim for shorter videos, because people don't necessarily want to spend a lot of time, either hearing me talk or basically just looking over charts. I spend a lot of time doing it, but it doesn't mean that everybody else does. But in any event, why don't we do this? Why don't we do the brief overview, and I'll come back to NQ and I'll burrow down, because NQ is what I solely focus on. The other stuff I'm doing just because it may create a little more interest for you as the viewer, basically just seeing some other stuff going on instead of it being NQ and nothing but NQ or MNQ. I mean, I'm in MNQ, but I'm looking at NQ because I can do long-term charts. There's more data available. MNQ's got about 3 years worth. And here I'm going back to 1999. So, all right. So let's go with the next step. The next one is going to be one that a lot of people look at. And that's ES, or the S&P 500 futures. The mini contract. MES would be the micro contract. And basically, I'm keeping the anchor momentum up so we can look at that. But right now we just have purely price plotted on the chart, obviously. And we want to basically try and make some sense out of it and see if there's opportunity. I mean, on a quarterly scale, once again, you're not going to necessarily trade on a quarterly scale. But to get a good sense of which direction things are going at, like if you're moving to the upside here at quarters at a time, well, you're going to buy the dip, obviously. But if you're in chop, and this is gigantic chop, you're going to behave a little differently. On the way down, you're going to do what I said in terms of sell the rip. You're not going to buy the dip, you're going to sell the rip. And then it's coming back to the upside, you're going to go back to buying the dip again, and then it comes back, and you're going to sell the rip again. And so it goes. But just looking at history and when things will happen, like this candle way back here, 1987, for those of you who don't know or are unaware, 1987, this was a major event. It was essentially 500 points down in a market when the S&P was trading at, the Dow was down 500, I'm sorry. The S&P wasn't down, scratch that. But in any event, it was a significant event. And it looks like it on this chart. We're not even on a log chart. Or are we? Did I log it? Yes, okay. It is a log chart. Just for the hell of it, let's take the log off for a minute and just look at it. You can't even tell. It looks like a little blip. It doesn't look like anything in comparison to the rest of the chart. And look at the takeoff. I mean, this is gigantic. Even if I do a log chart, it's gigantic in terms of the amount of, positive price appreciation. It's been bid to the moon. But anyway, getting back to 1987, it was a Black Monday or whatever they call it. It was a tremendous day down. And it was 500 points on the Dow. And I don't know the points in terms of 152 points, if I'm correct, on the ES in 1987. It was a lot. It just doesn't look like a lot. This is the bear market of 2000. This is a financial crisis. And let's see what else we got. Right here, that's COVID, which looks pretty substantial on this chart. Nothing to joke about. Pretty heavy. Then we have the 2022 correction and where we stand right now and where things are basically head to the downside, currently. So let's do this. Let's put the log chart back on and see what happens. and it changes it dramatically. First of all, obviously, going back to 1987, this was a significant event, and it represents that. So I like the log chart for that fact, that it's showing something more, the context is more real than just the regular way of approaching things. I mean, you have the bear market 2000, you got the financial crisis 2008, and you have COVID. Interesting thing is, COVID isn't represented that dramatically here, but it's dramatic enough, that's for sure. And the correction 2022, not dramatic. I mean, it's a correction. And what's going on currently? I mean, you wouldn't think that what's going on currently is just like some little walk in the park. I mean, people have been freaking out about losing money. I mean, it's not easy, that's for sure. But in the overall historical context, it's not approaching any one of the significant events that have happened before, at least not yet. We don't know what's ahead. We don't know what's on the right side of this chart. That's just the future, and we can't tell that. Now, if we bring in the anchored momentum, what do we see? Interestingly enough, you had the peak in 2000. Actually, 2000, you started to head down. You were peaking in 1998 when you had the long-term capital management crisis, I think it was. It's just another situation, that comes up. It seems like no matter what you do, there's always crises, or there's always this, that, or the other thing that comes up and kind of upsets the apple cart. But in any event, you started heading down. And sure enough, bear market. The anchor momentum is sure showing that it was significant bear market. And it came back around, it came up. Now what's interesting is this peaked just a little bit higher than here, but the peak on the anchor momentum is substantially less. So what do you have? You have that bearish divergence once again. And it's telling you a little bit ahead of time, which is nice. Because what happens is you get the financial crisis and bam, down it comes. So looking for divergence can help. You're not going to spot it all the time, but when you do spot it, verify it, go a little longer term. Like, I don't know how much further you're going to go than quarters. I mean, you go to yearly bars if you wanted to, or yearly candles. But in any event, it's just another thing to look at and try and figure out and get a handle on, and then strategically position yourself to benefit from it, hopefully. And then we have a long run to the upside, pretty much, and what do you see? The anchor momentum doesn't have any breaks to the downside underneath the zero line, and you're just basically trucking along, and that's what it's doing right now. Now, what's interesting, right on the front end, the red line's broken the green line pretty significantly, but that happened over here too, and we could end up having another little correction, little, quote unquote little, when we're getting swings of 1,000 points or more. I mean, there have been some pretty heavy duty moves here with this latest go round. But that's the ES, and a lot of people look at ES. And what I'm going to do now is I'm just going to throw up the annotations I put together. Let's see if there's anything we get out of that. Because the S&P's been so strong, we blew all the way up to the 1100 fib. Long way up. And then it kept going. So what do? You have to recalibrate and adjust. And basically, as a result, we're up at the 685.4 fib. And it's pretty much come up to the top there. Hasn't quite touched it yet. It's got a little ways to go. Just a little bit, not much. And then the question is, what happens? Does it peak? Does it go further? I mean, the way the charts look, everything just keeps going further. Is that inflation? I mean, stock inflation, futures inflation, price inflation. I mean, It's a lot of money running around. And the bids just keep taking it higher. So what else on here? Well, you got the price levels, and I drew the price levels in based upon this giant consolidation going on here. And then the move to the upside from there. But it came in real strong. I mean, we go back to 1983 on the S&P futures. I guess that's when they first came out with the futures, was the S&P. 1983 to 2000. And look at that. It's a hell of a move. Huge. And what's interesting is, I don't know if I can measure it. Just bear with me for a second. I want to add a drawing. If I go there to there, and I can't see the darn information panel that comes with this, with the trend line, but that, I'm thinking that right there, and then this right here, up to the very top here, is basically a measured move. What does that mean? A to B equals C to D. Does that mean anything? Does that mean a top? I don't know. I don't think so. I don't even know if it's necessarily a measured move. I can't tell enough down here because the information is buried off the left side of the chart here, as opposed to over here when I get a little bit of a, here, I'll show you quick. Okay, I gotta do that again. Just bear with me. I'm starting here. And I'm going up and away. And I'm just gonna leave that alone. And it's saying there are a total of 64 bars or 5,053 days, 5,753 days. And 791%, almost 792% gain. 5,200 points, 792%. Unbelievable. It's unbelievable. This is why everybody's told, just keep your money in the market, just stay in the market, it'll just go higher and higher and higher. The problem is the volatility. When the negative volatility kicks in, all of a sudden things are coming down hard, and you're seeing your statements, and all of a sudden it's like, oh my God, I'm losing tons of money. It's hard to hold, and I'm looking at quarterly charts here. You know, I mean that's not going to show you what you need to see in terms of making decisions, because this is history, and that's basically why I'm doing it. But it's also a situation where you can't really trade unless you're way out in terms of a position trader, and you're way out there, and you already have substantial gains to the upside. In other words, you got in, say, for argument's sake, down here, and we're up here, and you've realized you've weathered all the storms from there to there. I mean, it's possible, but it's not easy. And that's why I keep coming back to that book, The Mental Game of Trading, which is an excellent book. I put it in the comments on one of the videos that I did. I'd have to go back and see which one it was, but the synopsis is, you know, it's psychological. You gotta deal with the psychological aspect of trading, and not an easy thing to do, because your instincts a lot of times will get you in trouble. You know, either the greed kicks in, you're like, ha ha ha, I know what I'm doing now, I'm gonna make tons of money. Or the fear kicks in, you're like, holy crap, what did I do? I'm screwed. So, good book. So that's a yes. And the only bull market in town will do next, which is gold. So let me, well, it's not the only bull market in town, I shouldn't say that. But in a lot of ways, it seems like it is. So we're going all the way back to 1975. And then here's everything that's transpired since then. If you were lucky enough to get in on 2000, you had a long consolidation after this incredible run to the upside. There's too much too soon right there. It had to digest for a long time to basically absorb in that move. And absorb it did, and then boom, off it went. 2000, bam, to a top here. And that's another substantial move. There's structure there, but at the same time, it's a hell of a move to the upside. It's got to absorb. So it absorbs for a while. And absorb it did. And it's absorbing. It takes a little move to the upside. And that's not just a little move. These are quarters. It's a hell of a move right there in and of itself. And then you got more chop, more absorption. And here lately, what it's doing now, it's accelerating in certain ways. And why is that? Inflation's up. Everybody runs to gold when there's inflation, right? Maybe not necessarily all gold, but gold is one of the favorite vehicles to deal with when you want to have sound money, when you want to basically feel like, you know, what you're working with is worth something, has value. And gold has always had value. I look at it as a little yellow rock, but you know what? I'm a whack job. Okay, so what else? Well, we want to put the annotations in. And I left a lot of lines up here. And I was looking for confluence. And I was just noticing certain things. And I actually did more than just the white lines are Fibonacci projections. Or extensions, I should say. The light blue lines are Fibonacci retracements. So what do we have? We have the low down here at 101. Can you imagine? Gold at 101. Anyway, up it goes. $100 an ounce. To $800 or $900, was it? No, look at like 700 change. Anyway, but that point to there, and then I did the retracements as a result, coming back down. And what we had is 78.6 at the bottom here. And then I took a trend line and took it from there. Now I had to wait on the trend line to here to get some points to touch because it just took off and then it had to consolidate down to the trend line. So technically the trend line is something to look at, especially going forward from there and noticing how the trend line is holding as it goes higher, which is a good sign. But when we're down here, we don't know that this trend line is there. We're just working on price going to the upside here. And the Fibonacci extensions, basically showing you the whole way along. Up to 423.6, where price is currently approaching. Is that going to be a top? Maybe it's not something to do, anticipate. That's a problem that I have, is anticipating. I'll sit there and I'll say, is this a top? Should I trade off a top? No, maybe you need to let it go because it's just going to keep on going. I think that's what it's showing, you know? I mean, if you get a crazy move to the upside and you need structure and it's going to backfill to build that structure, well, then you can trade there and there's opportunity there. It's chop, but it's chop on a quarterly scale. So there's more than enough opportunity in and out, you know, on a lower time frame. But there are a lot of lines here and I have to thin them out. I didn't get around to it before I started the video, but I'll work on it. And then I'll bring this back in maybe at some point, maybe next weekend. Maybe that's what I'll do every weekend. I'll basically work on, you know, all the charts and then do a Sunday show like this. And you can decide whether or not you want to stick around, but I'm going to do it till I finish. So, okay. And the anchor momentum. The anchor momentum is showing what? Well, it didn't have enough data to account for the big boom on here, but it does show the fall that it took as a result, coming back down. And then it showed mostly red, which we can see here, it's consolidating sideways to down. So we're getting mostly red. And then it shows the bull market kicking in on gold. And what? You get the red line crossing the zero line just about where you want to get in. Maybe your first bite is here, which would have been nice. You didn't necessarily know after all of this that was the point, except that the anchor momentum is showing you, hey, you're crossing back over here. Maybe it's worthwhile. Didn't quite work out over here. I mean, you got a little movement, but not much. Kind of worked here. You got movement to the upside. Once again, these are quarter bars. So it's long periods of time, but it's accumulation nonetheless in terms of, appreciation money-wise. But the real deal happened here when the green line crossed the zero line and the red line's already above, and up you go. That's exactly what it's showing. Now, once again, this was the initial run. Then it takes a subsequent push higher, but what happens? Price or the anchor momentum leveled off, and then down it came. So there's divergence here. You're flat basically here, and you're moving higher here. You've got, once again, you got that bearish divergence going on. And as a result, it consolidates. Now, it doesn't collapse, which is a good sign. It consolidates sideways to downwards, which is to be expected, given the move that it took. So that's saying we're going to pause and then take it higher. And that's what it does. And that's gold. So the next stop that I have is oil. Now, oil is tough because oil is just inherently choppy. And given all the politics and everything involved, it makes it hard to trade oil. And CL, which is the main, not the main, it's the mini contract, goes $1,000 a pop. That's expensive. So that means that the micro goes for $100 a pop. That's more manageable, but still, that's still expensive too. You got to know what you're doing. If you're going to trade oil, you got to know what you're doing. And I'm not going to sit here and say that I know exactly how to trade oil. I mean, I may have messed around with it, and I did focus on it at one time, but I had to back off, and mostly because the leverage, that $1,000 a point, is heavy-duty leverage. It doesn't move like the others are moving. It moves at a slower pace, but still, it doesn't have to move that much to make substantial moves either to the positive side in your love and life or the negative side and you're cursing the heavens. But anyway, so this is oil, and we'll just look at it from a historical standpoint. Just a minute. I'm going to throw in the annotations. Now, I tried to make this, basically the most sense I could out of it because, by and large, it's chopping all over the place. Now, here's a little run to the upside here, but it's still chopping within that. Chop, 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 chop. But these are quarterly bars, once again, or quarterly candles. So you take it lower until you find trends that you can work with if you want to trade oil. My hat goes off to people who trade oil on a regular basis. If they're trading oil on a regular basis and they're still in the game, then they're doing just fine for themselves. And I applaud that. Okay, terrific. So I took this trend line and just extended it out. And by and large, it does a pretty good job of just showing the roughly over time, slow but steady movement to the upside of oil. Now there's one bar here, one candle that kind of throws the whole thing off. And it's right here. Oil went down as low as $6.50 a barrel. $6.50. I mean, I can't imagine $6.50 for a barrel of oil. And why is that? COVID. People got really scared, I guess. And a lot of people sold it down, and then people came in and realized what a steal it was and bought it right back up. And it took off as a result, almost straight up. And it's been chopping ever since. Slightly to the downside, which says, like we saw on the other chart, says that it's going to go up. It's just going to digest an incredible move. I mean, it took a plunge. Talk about a V-bottom. Took a plunge all the way down and then bounced all the way back up. And then some. Pretty intense. Now, in terms of the fibs, I mean, you got a 423.6 as a top here, and sure enough, the top of the market currently. Now, what's also interesting is this incredible bounce came to a lower high. Lower high, say goodbye. Lower high, down it comes. But it's not going to plunge again, at least not that I know of. Although you can look at some previous plunges that it took in history. Oil's tricky, tricky, tricky beast. So that's pretty much oil as it stands right now. If I'm running through quick and you have any questions whatsoever, if you're one of the people that are watching this right now, feel free to go in the comments and just put the question out there. If I don't know the answer, and I'll be the first to say, I probably won't know the answer, I'll certainly research the hell out of it and find the answer. So there's that. Okay, so that's oil. Now the next stop is something that should be relevant for today, and that's the dollar. And here's the dollar. Doesn't look like much right now, but it's something. Interestingly enough, 2000, 2001, the dollar was at 121. This is the dollar index, by the way. It was 121, and it crashed with the bear market. It crashed down 2003. Came back up just a little bit and then went further down. It's not a measured move here, just an overall big move to the downside, down to 70. From a 121 down to 70. It's brutal. But there are reasons to have a cheaper dollar. And, you can move exports. I'm just trying to think what benefits there are. I can't think off the top of my head. That's something I'll write down and I'll research. I would prefer to have a little more information for you than a little less. But it came down to $70, and sure enough, it's been working higher ever since. I would think, even though you may have problems in terms of the cost of your product in foreign markets, I would think having a strong currency is a good thing, because that would be the overall health, I think, of the economy of our country. You don't want to debase your currency. You really don't want to do that. There's temptations to do it, I guess. So what else is there to point out? Well, where it is currently, Chop City. It got as high as 112 and change, I believe. And now it's chopping down. It's at 99 and change. Now let's put the annotations up, see if there's anything worthwhile to look at there. Well, we got as high as a 261.8 on the fib, extending the price level back, ties into the highs here. Then we got a 200, and it's showing that range that it was chugging through. and it finally gave up. Boom, broke through the 200 and down it came. The 161.8 is showing some of the top action here in the interim. And the 100 showing basically top action here. And showing a breakout here. Interesting. Broke out here, went higher, had to come all the way back to touch. There's my dad's touchback right there. Had to come all the way back to touch and test twice price. Test price twice. I'll say that a couple times. Okay. So it tested at the 100%, came back down again, came into the neighborhood, just didn't test as low, and off it went. As far as trend lines go, got 1, 2, 3, 4 touches. It's a good enough trend line. So now the question has become, does it hold when price potentially comes down to it? With the recent events going on in terms of the dollar. And we shall see what we shall see. Anchor momentum, well, you've got a high here, tying into the high here, and you've got a substantial move on the red line here, and the green line not agreeing, and as a result, this potential high here was quickly taken out, back down to the downside. But what you do have is you have a lower high here to the higher high here, and you have higher high here, and you have higher high here. As essentially, once again, we're dealing with bearish divergence. So it makes sense that there's a lot of chop going on to the downside here, but it's not totally collapsing. It's not dealing with a situation like this. What we're dealing with is from here to here. It's a significant move. It's almost retraced, even though there's a lower high here, it's almost retraced back up into these highs in the 120s. Didn't get as high as that, but it got pretty darn high. So it's having to consolidate and maybe make another attempt to get back up to these areas. Because what do we got? Right at the top. This bar right here, this candle, came down through the 261.8 extension backwards here, meaning what? It's going to want to get back up here and test that. It's going to want to retrace and then bounce and then come up and test to get twice. Test price twice. I gotta keep saying that. Anyway, that's what it's gotta do. And it could take a long time to do it. I mean, in terms of quarters, this was a long time to come back to here and then move higher and still bounce back. And again, what do you got here? A higher low from here. Higher low, off you go. So that's the dollar. Now, in conjunction with the dollar, you've got the euro. And I shouldn't bring in any subjective feelings, so I'm not going to. I'll just bring up the euro, and we'll take a look at the euro. Excuse me. Take a look at the euro. I gotta do something. Hold on a second. Just hold tight. I don't want to have any orders hanging out there. So what is this? Forex. Foreign exchange. It's the euro against the dollar. And the euro crashing down means the dollar's going up. I believe. And I could be wrong. If you overlaid the dollar on this chart, was the dollar going down at the same time that the euro was? I don't know how that would be possible. You'll have to excuse me. I don't deal with Forex, so I'm not exactly sure. I know one thing about Forex, there's no volume involved, so it's difficult to work with. But I wanted to bring it up because why? Because the European Union is basically I think antagonistic would be the right word towards the U.S. in different ways. Definitely towards U.S. companies. Seems like the European Union's always dragging U.S. companies into courts over whatever. Could be like antitrust. It could be, I don't know, product problem. I don't know. It just seems to me like it's a situation where, a little bit of power goes to the head. But anyway, this is the euro. And the euro currently is bouncing a little bit to the upside, probably because of the issues that we're having in terms of getting things straightened away on our end. And what does that mean? Well, I mean, we've got to get certain initiatives through politically in Congress and such, and get going in a direction. I mean, if we're gonna adhere to what President Trump wants to do, then we got to get going in that direction. And if you're going to have people subverting and wanting to undo what President Trump is trying to do, then we're going to head in another direction. So there's uncertainty there. And where there's uncertainty, there's weakness. And where there's weakness, we're not going to get much price appreciation, I don't think. So it remains to be seen, but I want to bring up the euro. And from a historical standpoint, I have to be honest enough to say I have to do a little more work to fully understand the historical relevance of the euro. Now, there's another interesting thing I heard, a long time ago now, but the European Union was like the first union that there was going to be. Then there was going to be the Union of North America, Canada, the United States, and Mexico. We're going to become the American Union. And we were going to have, instead of a dollar in the United States, we're going to have the Amero. I guess to reflect the American Union. And it never happened. I'm kind of glad that it didn't happen. I don't think that would be such a good deal. I'd like to know what the benefits are of doing that. Because I don't know if I guess the European Union has benefited from being a union of different countries. But, different people act in different ways. It's kind of hard to kind of get them to agree and come together as a union. But anyway, I'll get off the soapbox now. So that's the euro. And then I was thinking, you know what? That's great. It's all futures, an index, and a forex. So how about some companies? And this is where it got crazy, because I just started thinking what companies should represent doing, trying to basically figure out from a price standpoint, from a perspective, I should say, in terms of, I don't know. What companies do I pick? I mean, there's roughly 5,000 companies in the NASDAQ. There's 500 companies in the S&P. And there's 30 companies in the Dow. Well, do you go with the big companies? The Magnificent Seven? I guess you could. And to be honest with you, I picked a couple of the Magnificent Seven. And pretty much, now that I'm looking at it, I got a total of 5. And there's only one that's not necessarily Magnificent Seven, but it's more magnificent than the Magnificent Seven, if that's possible. So let's just start. First is Apple. And once again, I did it again. I keep wanting to click on price for some reason. And when you click on price, it automatically brings up an order for you, which is very convenient, but it just makes it a little more difficult when I'm not necessarily entering in a trade. So we got Apple from a historical perspective. And Apple is pretty interesting to me. And the reason why it's interesting, is because it's a tale of two charts almost, if you want to say. We're going back to 1985 roughly and moving forward. And Apple's not doing much. It's chugging. Not doing much. Then we got a little pop with everything else popping. And the go-go 90s up until the dot-com bomb. The dot-com bomb market took it down to a point where I think that right here is obviously the difference in this company. Dramatic difference. And what is it? Mr. Jobs basically came up with the iPhone. And not that he himself came up with it. He collaborated with the rest of Apple, and Apple came out with the iPhone, which is just a revolution in communications and such. And I think the price of the stock reflects that. Everybody was getting a phone, except for me. I didn't get a phone until last September. That's how far behind the curve I am. But anyway, it's just a huge move. Absolutely gigantic. And it's all based upon one product. Not that they don't have other fine products. It's just the phone is something that's just to have a computerized phone. It's not like a phone like we used to have back in the old days, where you just picked up a handset and you dialed a number and you spoke to somebody else. This thing's like a Swiss Army knife. You can basically do all sorts of stuff with it. And people did. And people do. And they've only gotten more capable as time is going along. And now you've got AI tying into the phones. It's unbelievable. I mean, the advancements in technology are just unbelievable. Incredible. But what do you notice? Interestingly enough, you've got red down here, price is underneath, or the anchor momentum is below the zero line. And you get these big shots to the upside here. And it's just way over the green line here. So you know it's coming back down. And sure enough, it did. And here you got another shot. But this time you got more structure. You got the green line not quite as far below. And it's not plummeting. It's a little blip. It's like all this excitement based upon a phone. And it's not a phone. It's a computer phone. You're taking a computer that at one time in the early 40s, late 30s, ENIAC, I believe it was called, was the first computer that took up a whole gymnasium. That's how big it was. And now you're dealing with circuitry that's just infinitesimally smaller than that whole gymnasium computer, the first computer. Incredible. And off it goes. But what do you notice most of all? No red activity below the zero line here whatsoever. And as far as divergence goes, you have the initial wave of strength, you have a subsequent wave of strength. You would think that that negative divergence there would lead to a further drop in price. But all it did is it's a little correction, and then off it goes again. And it just keeps repeating. Now, when I put in the annotations, what am I plotting? I didn't plot that much because I didn't really know how best to approach showing, areas of support and resistance. But what I did notice is how, incredible this thing has grown. You're up at the 1100. This is the biggest fib I have, or the highest value fib, whatever you want to call it. It's the top. So this is a top. Except what does it do? It retraces a little bit, Then it chugs and breaks through and goes higher. So that validates this is not a top anymore. It was nice while it lasted. Then we have a subsequent top here. And it broke right through. Now what's interesting about this breakthrough is what didn't happen? No touchback. So this might be revisited. At some point, somewhere along the way, it's going to come back down and it's going to touch this area. Test price twice. And where are we at now? We have another move. So we have 3 successive moves of 1100% with the fibs. And this is just about there. 260.1, and this is a 261.67. So it's literally there now. And it's trading off. These are quarters once again. So it's trading off with everything else. But given what Apple's done, given what Apple's doing, and given where Apple's going, I would think it's going to keep on going. It's going to chop a little bit, maybe. But that's going to want to look to break through this one and establish another one. And it's just exponential rise to, God only knows where. Just, part of me is wondering, how do I say it? Part of me is wondering, is this like the tulip situation back in the 1600s or whatever it was? I think it was the 1600s in the Netherlands. Is this just irrational exuberance? Or is this just an incredible job done by Mr. Jobs and Apple to bring us a revolutionary communication device? I used to think about Dick Tracy, how cool it was that he had a wristwatch that he could communicate with. How great would that be? Well, they have that now. They have smartwatches and the phone. These phones, they're small. They're not that small. I happen to get a little flip phone, one of the Flip 6, I think it's called. That's a pretty small form factor. And the fact that you can fold the screen is really wild. But it's awesome. I spent a lot of time as a kid reading science fiction, and I just thought it was amazing, what these writers would come up with. And it seems like a lot of different things are coming to pass. I don't know if the writers knew it back then, but just reading it now is like, damn, man, it's on point. But anyway, so that's Apple. Not much going on. I could probably annotate it some more, but I don't think there's that much to do. So just either get in for the ride or get out and stand aside and watch it go by. But I brought up the whole tulip thing only because this just seems so incredible, this rise. Doesn't it come back? I don't know. Maybe stuff just doesn't come back. I don't know. So that's Apple. And the next one is Microsoft. And Microsoft is looking pretty impressive itself. Didn't come up with a phone, but came up with a game plan to deal with the PC in such a way that it made serious sums of money. And what do you have? You have an incredible rise through the 80s and 90s. Up until when? 2000. The dot-bomb hit. Didn't get hit that much before it started just chugging sideways. And what did it have to do? It had to digest this incredible run. So it spent years chugging sideways. Here's the financial crisis. So it took a little downdraft there, not much. And then it started to rise. And then it took off. Incredible. Not the same chart as Apple. It's doing its own thing, but it's doing its own thing incredibly so. Incredibly. So let's annotate it. And what did I put up here? Well, once again, we hit 1100% early on. And it just caused a little stutter step. A couple little tiny candles. And then it just zoomed on its way. So it didn't really pay much attention to the 1109% here. I did the 423.6 just to show that it took some time here to gather itself. And then we're way back down here at the 50% retrace. And why is that? Because it capped the run to the upside here. And it came back down, found a base of support, and then took off, smashed right through. Now, if I zoom in, I can't zoom in, can I? Darn it. What I want to find out is, I don't know if this touched back here. That would be incredible. Those touchbacks work. I don't know why they work, except test price twice. So then we go up to the consolidation, the big consolidation, which really happened between these two price levels. I mean, we initially got a surge up, but it came into this range and stayed there for years. But then it broke out, and then the real breakout happened here, and off it went. And where are we at now? We're not that close, but we're close enough to another 1100%. And right now it's playing around with the 685.4, which it came up to, backed off a little bit, found support on the 423.6, and then moved higher and went through and came back to touch. And then it's going higher. That's what it looks like. You weather the storm. Right now there's a storm. Or maybe it's the calm before the storm. Maybe we haven't hit the storm yet. But we're getting a little bit of a squall. So you gotta batten down the hatches. And that's Microsoft. And the next one, probably the most popular stock out there in terms of volume currently, that would be NVIDIA. And NVIDIA had time where it was basically chugging along till it hit on some, I don't know whether it was the initial video cards that it came out with. People were so into playing games and stuff. Or was the beginnings of AI. And people were getting excited about that. So you break out and off you go. If I bring up the annotations, it's these companies are doing, some of the same thing. What? We're blowing out 1100%, blowing out another level of 1100%. And it's currently trading up above that area. Even though it's come down, to some degree, it's still flying. Now I took this trend line, and I think it's significant enough. You got 1, 2, 3, 4, 5, 6, 7, 8, 9, whatever you want to call it, points that it touches, and then it takes off, and it's way up from that trend line. At some point, does it come down? I guess. Unless they keep innovating, unless they keep breaking, barriers in terms of making money and just creating markets. I mean, we shall see what we shall see. In the meantime, I'll just see if I can continue to refine and hone these charts and have the annotations really outline what I think is where things are going. And then I'll put a video together and relay it to you. Now with the wild swings, the momentum, the anchor momentum, has been kind of flying along here up and down and, a little crazy. But what you got to look for is what? Way back here, the break above, the red line breaking above the green line, then the red line breaking the zero line, then the green line breaking the zero line. You're right here. That's a hell of a place to get in. And you're saying as long as it holds above the trend line here, I'm staying in. And sure enough, off it goes. That's easy to say at this point. Once again, we're dealing with history, so it's real easy to look backwards and see what's going on. And I don't think I could zero in with the log charts. I wish I could. I would zero in this whole area and then just inch one candle at a time or a couple candles at a time and see if you could see and sense where's the point to get in. I mean, even if you got a little move back down to the green line, the red line touches green line right here. That's right before it blows big time. Momentum to the upside. You got to cross the red line crossing the green line to the downside. And what happens? It's a few candles behind. And these are quarters once again. So you got a lot of time to basically see where, you basically want to get out before this breaks down. Takes everything back to here. And it has to start working its higher again. So that's NVIDIA. Then we have Mr. Musk's company, Tesla. And I did it again. Please excuse me. I hate that. Okay. Now, it doesn't have as many candles as the other companies has, but it certainly has price appreciation. I'm just taking a moment to look, see. Well, I can put the annotations on. And let's see now. Well, what do we see right away? Like the others, blows up to 1100%. Does it again. And right now, it's at a point where it's just starting again. Probably going to take a while. This consolidation here certainly took some time before it took off. I would imagine that this consolidation here is going to take that much time, maybe more. So it'll be in a range. Ranging is difficult to trade, but this is a quarterly chart. Quarterly range provides lots of opportunity to trade. If you know from a quarterly perspective where to go, then everything underneath it should go smoothly, hopefully. At least that's what I hope. But I think all of these companies, these 4 companies that I've shown you, are just incredible. I mean, what they've been able to do. And it would make sense because we're on the verge, if not already thoroughly immersed, in a technology revolution. So many different things happening and so many just incredible things happening at the same time. What else? So that's Tesla. And as far as all 4 companies go, that I've shown you here, I'll continue to follow, and I'll continue to refine, and I'll continue to figure out where I think opportunity lies. And if I have a chance to figure it out and it works out, then I'll definitely relay it to you, and you can decide whether or not you want to follow along, or you want to do your own thing, or whatever it is that you feel is the way to go. I mean, if you made it this far into the video here, I thank you for your patience and for being interested enough to follow along, and we'll just see where it goes. So there's one more company, there's one more company that I want to bring up. And the reason why I bring it up is because it's not necessarily a technology company. And yet it's done incredibly impressive returns for people who've been involved with it. That would be Mr. Buffett's company, Berkshire A. And here I did it again. Sorry about that. Berkshire Hathaway, the A shares. It's kind of like NQ and MNQ. NQ is $20 a pop. MNQ is $2 a pop. Well, Berkshire A is $784,000 a pop. That is just huge. Then there's Berkshire B, and I'm sorry I don't have that number in front of me, so I don't know. But I know it's not $784,000 a pop. But I just look at this chart and what Mr. Buffett has been able to accomplish with Mr. Munger. Mr. Munger is no longer with us, I believe, so rest in peace, Mr. Munger. But it goes from the bottom left to the top right, and there's not much in between. If there's consolidation around here, or if there's basically, a drop, like the financial crisis here, that's about the biggest hit that this is taken. And that's not saying much because it didn't really do much at all. And it just bolted out of the friggin' gate and took off. Just incredible. Unreal. But I hand it to all the people at Berkshire Hathaway. To be able to accomplish something like this is really impressive. Truly impressive. So let's annotate it, at least as far as what I saw. Now, it's not a technology company, but yet it blew 1,100% back in the 90s. When there was, in comparison to now, there wasn't any technology. I mean, we had technology, but not on near the level we have now. Then it blew 1,100% again, and now it currently stands to blow 1,100% again. It's approaching that very point as we speak. It's cranking. And somebody told me that Mr. Buffett's out of the market right now. It's probably a good thing to do. Stand aside, let the fur fly, and then get back in when you know it's the time to do it. In the meantime, just looking at this is incredible. Drawing a trend line, I mean, you could say it got 2 touches here, and it got like 3 touches here, but you'd have to wait an awfully long time to draw the trend line. But it doesn't matter, because this thing isn't going anywhere near the trend line. It did here. And why? Is that COVID there? Yeah, it's COVID. The only reason why this thing touched the trend line is because of COVID. Everybody got hit by COVID, which is a whole nother ball of wax I'm not going to get into. I could get back up on the soapbox and talk about COVID, but we'll leave it. I got my mother who's dealing with long COVID. She can't breathe half the time. Just drives me nuts thinking about that crap, gain of function and all that stuff. Anyway, so that's Berkshire A. Berkshire Hathaway A shares. Just unbelievable. And we stand at roughly 75 minutes. So an hour and 15 minutes. This might be the longest video. But I wanted to do this because I wanted to talk about something other than NQ that would have people interested in taking a look. So if all I do is talk about NQ all the time, people may just naturally want to look at something else. And I'm not looking to necessarily gain viewers for viewers' sake, but I'm hoping to put stuff together that will be compelling enough that maybe you'll stick it out and watch the whole thing. I'm sticking it out anyway. Why? Because I'm the one putting it together. If I wasn't putting it together, would I stick it out? I have to be honest enough to say I don't know. I mean, I watch lots of videos and I read any number of different things. I'm just really trying to find answers to hopefully make me a better trader so that I can make money, take care of my family, if that's what it calls for. So that's the wrap up. And I want to thank you. If you're here right now and you're listening to this and you've been watching, I want to thank you for stopping by. And I appreciate the patience dealing with some of the hiccups that I have along the way. And I'll look forward to, I'm not going to say it, I'm not going to see you in the next one. I'm just going to look forward to hopefully putting something together that you may watch in the future. How's that? But what I'm really going to say is good night. All right, good night.